Hey everyone! Welcome back to our channel where we break down complex financial topics into easy-to-understand segments. Today we're talking about the Indian rupee, which has been losing value against the US dollar for quite some time now. Recently, it crossed a significant threshold, 85 rupees for $1. This is a big deal because it marks a new low for the currency. What this means is that you now need a lot more rupees to get the same amount of dollars. This isn't a sudden change, it's been happening gradually over the years. The rupee has been getting weaker for a while, and this trend shows no signs of stopping anytime soon. To put things into perspective, 10 years ago, when Prime Minister Modi came into office, $1 cost about 61 rupees. Fast forward to today, and it's way more. This significant drop in the rupee's value highlights a shift in the economic dynamics between the two currencies. Understanding why this is happening is crucial for anyone involved in international trade, whether you're buying or selling goods with other countries, or investing overseas. The weakening rupee affects how much we pay for imported goods, making everyday items more expensive. It also impacts the cost of traveling abroad, as your rupees won't go as far as they used to. And let's not forget about investments. A weaker rupee can affect the returns on your investments, especially if you're investing in foreign markets. So, why is the rupee weakening? There are multiple factors at play, including inflation, trade deficits, and changes in global economic policies. Understanding these can help you make better financial decisions. Stay tuned as we dive deeper into these factors in our upcoming videos. Make sure to like, subscribe, and hit the bell icon to stay updated. Thanks for watching and see you next time. Think of money like any other thing you buy, like rice or gold. Just like these items, money has a value that can change over time. Its price goes up and down based on how much is available and how much people want it. This is known as supply and demand. An exchange rate tells us how much one kind of money is worth compared to another. It's like a price tag for different currencies. For example, the exchange rate between the Indian rupee and the US dollar tells us how many rupees we need to buy $1. This rate can change daily. Exchange rates are super important for buying and selling between countries. They affect the cost of goods and services traded internationally. Let's say a company in India wants to buy a machine from the US. They can't just pay in rupees, they have to pay in dollars. This means they need to convert their rupees into dollars. The exchange rate decides how many rupees the Indian company needs to spend to get those dollars. A favorable exchange rate can save the company money, while an unfavorable rate can increase costs. The exchange rate isn't fixed. It's always changing based on how many people want to buy and sell each currency. If lots of people want to buy dollars using rupees, the dollar gets stronger and the rupee gets weaker. But, if lots of people are selling dollars to buy rupees, the rupee gets stronger and the dollar gets weaker. Many things can affect this.
One big thing is the difference in interest rates between countries. If interest rates in the US are higher than in India, investors might take their money out of India and put it in the US to earn more. This makes more people want dollars and weakens the rupee.
So, why is the rupee getting weaker against the dollar? This is a question that has been on the minds of many people lately, especially those who are directly affected by the fluctuations in currency value. A few things are happening. It's a complex issue with multiple factors at play, both domestically and internationally.
First, prices in India have been going up faster than in the US. This is known as inflation, and it erodes the purchasing power of the rupee. When prices go up a lot, our money buys less. This means that the same amount of rupees can buy fewer goods and services than before. This makes the rupee less appealing compared to the dollar. Investors and traders prefer to hold currencies that are stable and have higher purchasing power.
Second, the US Federal Reserve has been raising interest rates to fight rising prices in the US. Higher interest rates attract investors looking for better returns on their investments. This makes investing in the US more appealing, making even more people want dollars, which puts pressure on the rupee. As demand for the dollar increases, its value goes up, and the rupee's value goes down.
Third, India buys more stuff from other countries than it sells to them. This trade imbalance means that more dollars are needed to pay for imports. This means India needs more dollars to pay for what it buys, which makes the rupee weaker. The higher demand for dollars drives up its value, while the rupee's value falls.
Finally, things happening around the world like political problems and slow economies can also affect money markets, including the rupee. Global uncertainties make investors cautious, often leading them to seek safer currencies like the dollar. A weaker rupee has good and bad sides for India.
The good news is, it makes things India sells to other countries cheaper, which can help industries like clothing and computer services. The bad news is, it makes things we buy from other countries more expensive, especially important things like oil. This can make prices go up in India, which is tough for people and businesses.
A weaker rupee also makes it more expensive for India to pay back money it borrowed from other countries. This can be hard on the government's budget and affect how stable the economy is. Guessing what will happen with exchange rates is tricky.
But looking at what's happening now, the rupee might get even weaker next year. The US economy is still strong, and the US Federal Reserve might keep raising interest rates.
The Reserve Bank of India, or RBI, is important in managing the rupee's value. The RBI can step in and buy or sell dollars to help keep the rupee stable.
In the end, what happens to the rupee depends on lots of things in India and around the world, including rising prices, interest rates, how much we buy and sell to other countries, and what's happening politically.